What's up, everybody? Dave Bartosiak, Dave's Daily Dive. Let's go ahead and start digging in here. S&P 500. Now, there's a reason why I've got this zoomed out a little bit here. Maybe a little bit of RELAX, right? Relax, chill out, stop freaking out. This S&P 500 here, going back, this is 2003, right? Of course, we all know what happened in 07, 08, 09, but and even some choppiness we had in 2015, 2016. Of course, the most recent downturn is always the most painful, right? Could I make that any bigger? The most recent downturn is always the most painful downturn, and we know that. So this move that had us bottoming out on Christmas Eve last year was brutal. And since then, things have gotten much better. Now, we all know why, right? We've got plenty of tailwinds for the market, but something I want to put into perspective here. Even with this crazy run that we've had as of late, it has felt crazy. I do know that the move from the 200-day with the S&P 500 right around 2860 up here to 3150. Okay, not quite, but this recent move, right? So 3154. The high yesterday, or not yesterday, rather, but Wednesday. It feels like we've really run a lot, but if you zoom out and give yourself some perspective, and I know trend lines aren't everyone's favorite thing in the world to do, but if you give yourself a little bit of regression, right? I'm sure I could pull up a regression analysis on this, but either way, overall, this trend is much higher than where the market is right now. Even if we go off this bottom trend line, draw that channel, right? We're still in the shallow end of this. So the market's got plenty of room to go to the upside, even by, arbitrary trend line analysis, which I'm not the biggest fan of, and not many people, not everybody, a lot of people that are the biggest fans of it. But still, so just to give you some perspective, we've got a lot of room to run. Now, commodity channel index has been overbought for a pretty good grip. This is from the third week of October. We've been over 100 on the commodity channel index. Now that is a pretty long run, and that I think is what's making a lot of people nervous in this market, and maybe it should. But we've had runs like this before, right? Pretty much the June run, and then this October run. But look at early 2019. I mean, this commodity channel index was from January pretty much through April overbought, right? So this run that we've had lately basically is coinciding with what no one wants to call QE4, but is essentially QE4. And I get into that in my write-up, and we can start talking about that later. But the moral of the story here is that the S&P still has plenty of room to run. But that doesn't mean that you should blindly just run out there and buy every stock. We've got 5 names for you, 5 Zacks Rank #1 strong buy stocks. So that means that earnings estimates have been moving in a positive direction on these stocks, which could help explain why they are breaking out to new 52-week highs. So here's Chewy's holdings. Now, this is a stock that bottomed out underneath $18. It's been on a decent run, but is still, even at a 52-week high here, is still well off of its 2018 highs up at 34. So again, the moral of the story here, room to run. And remember, Zacks Rank #1 strong buy stock. So that means that the underlying earnings trend on this one is very positive. The next one I got for you is Dexcom, medical device company. Earnings estimates moving in a positive direction. The stock moving in a positive direction. Really had a tough time getting past 160. Get the big gap up on earnings. I know it's real tough to jump in there on a stock that's overbought, right? Commodity channel index over 100s just sort of dipped down. Maybe you want a small pullback on that one, but look at what's happening here. Even as the broad market pulled back today, this stock didn't care. Dexcom, DXCM. Now volume's starting to tick down a little bit, but I think you gotta weigh that against the holiday week. So check out, see what happens next week. Decent volume could lead to a breakout past 230 on that one. Here's a stock that everybody should know. It's NetEase, ticker NTES. So they are a Chinese online game and e-commerce company. And they have done very well since August. This earnings report back in August really set them on a positive trajectory. They're going to be reporting again soon. Something to keep an eye on here. Or, I'm sorry, they just reported November 20th. And again, look at what's happening. You got a nice rally happening here after that earnings report. Same thing we saw in August, but a little bit of choppiness. Maybe something you want to wait for a pullback because it has a tendency to do that. Goes for a little bit of a ride, and then it pulls back for a week. It's going on a ride right now. You may want to wait for that one to pull back. That's NetEase, ticker NTES. Then we got Prologis, PLD. REITs are boring, right? I'm going to zoom in here and say REITs are boring. 91.55, REITs are boring. Stock, the end of May, 73.13, REITs are boring. How about we go back to 2017? REITs are boring. The stock's at 51. Basically, they're logistics real estate with a focus on sort of high growth markets, okay? So they develop projects, things like that. They lease facilities to logistics companies, right? So they buy it and then they lease it to, UPS. I don't even know if UPS is a customer, but you know what I mean. Logistics, right? Monster last few years. These are the perfect stocks to take a look at when you're leaning on the strength of that Zacks Rank. Because if the Zacks Rank is high, that means earnings estimates keep on creeping in the positive direction. For something like a REIT, that's fantastic, because if earnings are creeping up in a positive direction, that means that they are continuing to add properties and getting really good rents for them, which is good for you as an investor. Now, the last one I want to show you is QRVO. Big gap up on earnings. This thing is hot. Again, you may wait for a little bit of a pullback. We're not 100% sure what's happening here with volumes, right? So it's tough to look at this and say, well, volumes really started to come down here. Maybe we should be careful. Maybe this is an exhaustion of the buyers. You can't say that with this shortened holiday week because volumes were so low across the board. And I'm just going to go back to show you what I mean by those volumes being so low across the board. Look at SPY. So earlier in the week, what's that? Tuesday, the 26th, 37 million shares of SPY traded. Today, 36.5. Now, granted, we only had a half day today, so this is what the market's been facing, right? Really low volumes here. Not a lot of people playing the game. That's going to change. I can assure you of that. I don't know when, though, but it's going to change. And also something to note is when we have periods of higher volume, that's when you tend to have reversals. That's when you tend to have volatility, okay? When you're having these low volume periods, it's tough to have a low volume reversal because the trend is your friend until it ends. So until somebody comes in and starts selling or starts bucking that trend with volume, just stick with it. The overall trend here for the market is still up. I'm pretty bullish on things. That's all I got for your Dave's Daily Dive. Have a good one.